like, you can go into public records in all the different states that I've lived in and like figure out how many traffic tickets I got, and it's pretty easy if you know how to dig through public record databases and you kind of have an aggregated platform, you can do that. And that's the kind of stuff that you pull. But the problem is that Visa is not a public company.
That's what I'm saying.
They're a public company, but they're not a government agency. And
without
so
the transparency, without the transparency, how do I know that I'm not onboarding a merchant who, if they screw up again, it's $100,000 or a $200,000 brand violation? Like for something that's fairly simple, it's just a repeat offender. And how am I supposed to even determine that? And then I'm on the hook for that, right? I mean,
and I don't think there's no incentive for the acquirer who gets hit with the initial violation because they're like, cool, you're blacklisted on our channel. Like, get out. You're off. Here's your fine. Be gone. And, they don't have a responsibility to their competitors to go and be like, hey, guys, this guy screwed up and he had a $200K fine. Like, don't board him again.
Welcome to the Payments Experts Podcast, a podcast of Global Legal Law Firm. We hope you enjoy this episode.
So I have some POS guys. They sell POS systems primarily. They've got processing attached to many of their POS systems. One of the biggest topics is dual pricing surcharging. We get so many calls these days about what's the signage I have to have. Dude, I'm watching. This is for anybody who's watching this that actually cares about our podcast, I'm going to do one very soon about this issue. But we even have agents out competing against other agents, creating violations with dual pricing or on tickets to then go resell the merchant that got violated, that they contributed in the violation. Or, there's all sorts of stuff going out there. And when it's being reported to me, I'm just making notes. I'm going to have a whole talk about this. The thing that I saw last week was these POS guys came to me and they said, hey, we've got 4 merchants. It's $5,000. Here's what the signage is. Here's our POS signage. Here's their signage. Here's what we've been doing. Here's what we've been telling people. And we went through the whole process of what's compliant and what's not. And when we got to the end, they were like, well, we just want to know, because they had a legitimate reason for why the receipt was wrong. And I said, look, you might be in violation of California law, but I think if you had a responsive party on the other side who wasn't looking to ding you with a fine, the reason that you just gave me, I think, is kind of justifiable. This was a mistake. And it wasn't intended as a wrongful surcharge because it was being done on credit and cash. It didn't matter. It was a screw up with the POS system. Okay. So I said, I wouldn't really, because you got to pay $5,000 to even oppose it. And I said, I wouldn't really deal with it, to be honest with you. But here's the interesting part. You know that these are second violations, right? Because $5,000 second violation, $1,000 the first. That means you inherited merchants that have a second or a first violation already. So your liability and risk is greater when you're boarding this merchant. And it raised the question of, is there any scrubbing process to scrub for prior violations? So I sent that off to some of our FSP clients because I thought that was a great question. Like, when I'm boarding a merchant, what liability am I taking on related to the card brand's prior interaction with the merchant, right? Everybody knows that match exists, but is there any secondary reporting on a merchant related to fines? I doubt that exists. So I thought that was very interesting. But one of the FSPs got back to me and he said, well, they violated the rules. Why weren't they matched? Right? And I'm thinking, well, because it's like getting a speeding ticket. I already think that the punishment's the fine. But it's difficult to know the rules. They're not really well published. People don't know them. Otherwise, I wouldn't have like a job to do. And so if you think about it. So, we try to highlight some of these things. And I'm looking at this particular situation. And then he said, well, wouldn't I have liability against the prior ISO or like recourse against the prior ISO because there was no reporting, or the acquiring bank because that's really where the reporting's supposed to take place? So he raised a couple questions that I didn't immediately have an answer to, which I thought were very interesting. But the point of my little example was there's no violation or there's no match placement for a violation of the dual pricing guidelines. What about VAMP? What do you think they're going to do? And how are they going to do it? Like, how are they actually going to equitably dole out fines and then dole out some sort of match placement? And then what is that unintended impact going to be on commerce in general? I mean, we already see the shady game of duck, duck, goose, IBO, we see it all the time. I think that a lot of times when you have like regime changes, you have unintended consequences that even if the intent was a good intent in general for the marketplace, right? There's a lot of unintended consequences that take place, like the example that I was talking about earlier. So do you think that they're going to match merchants based on VAMP ratios? Or, I mean, they'll kill them, but is there going to be some sort of trigger where you're like above a certain number and without even saying anything, boom, there's match. And again, great for me. Great for me. I'm not sure how great it's going to be for U.S. commerce, but it's going to be awesome for me. But what do you see happening with VAMP violations?
Yeah, it's a good question, right? Because it's kind of the same thing right now where the ambiguity on the Visa dispute monitoring program or MasterCard's program or whichever, you can get match listed today for excessive chargebacks on those programs. And I think that VAMP's going to operate in a pretty similar way. And maybe they just add another reason code for like excessive fraudulent chargebacks on TC40. I don't know if that one exists today, but you probably do better than me off the top of your head, but
I think not necessarily. Yeah, we don't get into the granular too often. I mean, I was interested in that. I'm also interested in, like, have you seen a scrubbing process so that I could actually properly analyze my risk by onboarding a merchant related to fines that I'm going to ultimately be responsible for?
No, not really. I mean, there's a few ways you can do it, and a lot of people do it through their KYC and KYB checks, proper acquirers or whatever when they're bringing merchants on board. Obviously, you look for bankruptcy, the UBO, and of course the entity and any sort of outstanding collections, stuff like that. That's super easy to run in databases. What's a little bit more granular on top of that is, outstanding or previous tickets, right? So you can look at with most people, if you have, Matthew Steinbrecher is my name, like you can go into public records in all the different states that I've lived in and like figure out how many traffic tickets I got, and it's pretty easy if you know how to dig through public record databases and you kind of have an aggregated platform, you can do that. And that's the kind of stuff that you pull. But the problem is that Visa is not a public company.
That's what I'm saying.
Well, they're a public company, but they're not a government agency. And
without
so they have
the transparency,
no
without the transparency, how do I know that I'm not onboarding a merchant who, if they screw up again, it's $100,000 or a $200,000 brand violation? Like for something that's fairly simple, it's just a repeat offender. And how am I supposed to even determine that? And then I'm on the hook for that, right? I mean,
and I don't think there's no incentive for the acquirer who gets hit with the initial violation because they're like, cool, you're blacklisted on our channel. Like, get out. You're off. Here's your fine. Be gone. And, they don't have a responsibility to their competitors to go and be like, hey, guys, this guy screwed up and he had a $200K fine. Like, don't board him again. And there's definitely, in the agent ISO world, there's, lists and we talk and, we can sniff things out. But from like a much higher level of scale of millions and millions of mids getting created every month, there's no way to do it. And I imagine that's one of the gaps that probably Visa is going to run into pretty quickly here, is that they have to have some way similar to a match list where they're tracking those violations, but maybe not with match, right? Like you could have a shitty month with e-commerce and like your warehouse lights on fire and you've got a bunch of orders outstanding and you're like, hey guys, we're going to refund your orders. We're getting a new warehouse, whatever. Like that's a very real world, totally gray area example, but like your chargebacks could go through the roof. You got a bunch of pissed off customers who are like, I don't care if you want a refund, too late, I charged it back. There's
and look, to the credit of the acquiring banks, and because we don't go to Visa, MasterCard, really, we go to every now and then we bump into it. But to the credit of the acquiring banks, when there's a real world situation, they do listen, and we get a lot of people off. Sure. I mean, we do. Yeah. We get a lot of people off, like far more than pre-COVID. Like you got placed on Match or TMF, you're done, right? Yeah. Today, it feels like there's definitely a little more latitude and definitely a more responsive ear. But, I'm sitting there looking at it from the context of it can't be through Match. Otherwise, you would match place them. But what about like a secondary reporting database that tracks fines, previous fines against EINs? I don't think they're incentivized to do it because every fine they collect is just more money for them. I mean, it's like it is a regime that they have oversight, sort of like chargebacks, where they are assessing fines, collecting those, and they're not doing anything for the money. It's just penalizing people within, and look, sometimes rightfully penalizing people that are operating in their ecosystem. But there's a lot of times where it's very difficult when you're the arbiter of all of the decisions and it goes directly to your for-profit bottom line, right? You got to wonder, like, how much machination goes in there that seems a little self-serving. I don't really know. It's kind of what this podcast is all about.
I feel like there's this is a good example. I never really thought about it like that, which is super interesting because you have your match list, you have MAC alerts. And then it's really just, and MAC alerts is really just kind of a community for underwriters to flag stuff to each other. But like, it's not like an official process. Almost like with Match, it's very ambiguous and there's no like kind of cohesive rule set that's publicly listed and is like, here you go. In the same way, like Visa localization rules are posted on their website, and you can read through them and they make sense. And it's not, there's nothing like that yet, but I suspect there will be because I can imagine. So one of the things I think that's going to happen is there's going to be a huge consolidation. I think Visa introduced VAMP and ping-ponged all the rules around quite a bit because what they're trying to do is minimize the number of direct acquirers, principal members in the US, and pick the good players. And I think that they're going to try to consolidate some of these higher risk shops and have them fold into larger players who have more risk to be able to balance the portfolio. I think that's like one of my sneaking suspicions of, tinfoil hat for a second of like why I think ultimately they may have done it is because it's less stuff for them to regulate and they can start to consolidate the market a little bit more. And I think that smarter players like the much larger tier one processors, I think that they're going to wise up at some point and realize that they might have an opportunity to sort of take in some of these maybe higher risk portfolios or whatever. But once that consolidation happens, what we just spoke about is absolutely true, right? And if I'm a owner of a high risk, acquiring bank in the US and I sell to whoever, some, Stripe, for example, I'm out. I sold my shares. I'm done. I cashed out. Like I'm good. You bought my book and that's that. And I may not have a responsibility in those terms to tell you what's going on. Or same thing. Some of these guys might just fold. They might just close shop. They may say, great, we're taking a bunch of reserves and we're going to fold or have to go into administration depending on the situation. And so I think, those are much smaller players, right? But I think there's going to be that consolidation. And I think that's where you're going to start to run into Visa having to look at some sort of program to, look at the violations.
Well, it's funny you said that about the portfolio and selling. I talked to some guys yesterday, money guys that are coming over from Merchant Cash Advance, wanting to do some funding for people that buy portfolios. But they're virgins in the industry. They don't understand the purchase. And, one of the guys who's like, he's got a business degree from Georgetown. He's a fucking smart guy, right? He says, I don't know what I don't know, but this seems really simple. Like this guy's acquisition model seems very, very simple. And I was like, yeah, man, I mean, really, to me, it's about the origination of the account. when you originate an account, where that account originates from will determine the stickiness, whether or not you're seeing attrition, and a lot of the portfolio that they were first analyzing were bank referrals. And I'm like, look, unless the bank goes under or the customer's pissed at the bank, this account's not going anywhere for a long period of time, right? Like, this is one of the, even if there's a rate increase, like, as a cost of living adjustment almost, right? You're still going to see that merchant staying right there because they're bundled in with loans. They're bundled in with all sorts of other financial products with the bank, their deposit accounts. I said, that's like the holy grail right there of buying a portfolio. You're going to be counting the money for a long time. And that's not even considering the future business with the bank as they continue to acquire customers and onboard them. I said, so, it really does come down to, what does it look like? Because there's more impact, again, unintended consequences. What you just described was what's going to happen to purchasers coming in to purchase portfolios, not understanding the real risk associated with some of those portfolios and not having data in order to analyze that risk based on what we've been talking about here, right?
Yeah, just no visibility. They're going in blind.
Yeah, totally. Well, look, man, what do you want to leave us with?
I don't know. I'd say more will be revealed for sure. I think November is probably when we're going to really start to see the bloodbath unfold, if we see it at all. But yeah, I mean, kind of what I mentioned before. I really think there's going to be a consolidation shift here. Probably it'll start moving within the next 6 months. But I'd say by like Q3 next year, we're going to start to see some movement and some M&A in the space, particularly in U.S. acquiring small acquirers. I think are going to start getting swallowed up or merging, just in order to balance the books better. And I for sure see that coming as part of this, based on everything I'm seeing and hearing, and the general buzz. I feel like that's probably one of the unintended consequences, maybe intended consequence.
You think it'll Visa. You think it'll make it there? Okay, without giving away secret sauce, what opportunity do you see for yourself in that scenario?
I've been approaching some of the larger, like tier 1 players with viable strategies. Traditionally a company that would only take a certain type of risk profile, since every acquirer kind of has their niche for the most part. And maybe they won't take a certain type of risk profile or certain industry, like they just don't touch it. And approaching them tactfully and saying, look, there's an industry here and there's an opportunity. And like, yes, your underwriting and risk team may not fully understand this industry, right? Travel, for example, usually really low margin, huge delays in funding times, very high bankruptcy risk, right? Like very complex market. You see something like that, you go to someone and say, look, you can make a lot more margin in this industry if you're able to, tackle it. Maybe nutraceuticals, for example. Adyen is a good example. They came into the U.S. market. They dominate in Europe. They came into the U.S. market trying to fight Stripe and Checkout.com for the most part. And like they didn't touch any nutraceuticals initially, and now they're pushing very hard and winning a lot of business in that space. And I think they're starting to see that there's an opportunity in certain verticals that maybe they wouldn't touch before, but now they understand, well, when we look at our balanced portfolio, we can sort of take on some of these higher risk verticals that we traditionally wouldn't have done. And that's where I think we're going to start seeing some of that cannibalization and M&A activity, is you're going to have larger shops like that say, well, great, we're processing payments for Airbnb and Uber and, Google. We don't have a whole lot of, chargeback risk. So we could take some things on maybe a small local airline in the US or something like that. Or, a larger nutraceutical shop who generally has higher chargeback rates for whatever reason. And that's kind of where I see the biggest opportunity right now. What I've been looking at is like, how can some of these traditionally standoffish players look at some of these new verticals and dive into them, but responsibly, right? There's a good way to ramp up and do it responsibly. It's very easy to get caught up in a new industry and just get burned. And we see that time and time again with different shops and portfolios that grow up and then blow up. But yeah, that's probably the biggest opportunity that I see and kind of what I've been navigating right now.
Awesome.
Excellent. You guys, that was a great conversation. Matt, so much. We're so grateful for you joining us once again. Everybody listening, please, you can find Matt Steinbrecher, Sound Commerce, at sound-commerce.com. We got all the information down below. Thank you for this conversation today. We're looking forward to the next one. Thank you for listening to this episode of the Payments Experts Podcast, a podcast of Global Legal Law Firm. Visit us online today at globallegallawfirm.com. Matters discussed are all opinions and do not constitute legal advice. All events or likeness to real people and events is a coincidence.